Coming up in this show, I'm going to bring you my opening comments on the markets. Katie has trade planning with options. She's going to look at our charting and option strategies in XBI. Arvi has a trade idea, and he's going to be teaching our style of charting and looking at a trade setup in FCX. I'll show you our amazing new day trader. You've got to look at this great service, especially if you're a very active trader in the market. You'll see our amazing new day trader cockpit. And I'll bring you my analysis of the stock market. I'll show you multiple time frame analysis in SPY, and you'll see why it's still powerful and what would change that.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market chopped narrowly in this holiday-shortened week, seeing early weakness in what were very strong semiconductor stocks soften a bit as they gave some ground. But a huge final hour on Wednesday brought the indexes back up as the Dow gained 450 points to an all-time high on that day. There are signs of rotation as the rally on Wednesday came on very strong breath and good leadership from financial stocks. And those patterns are looking strong or improving despite looming commercial real estate problems. Fed heads Bostic and Waller, they were out and gave a speech on Wednesday night, each of them separately, and they were much more hawkish Wednesday night, as they said that there's no hurry to cut rates, and Bostic says there may only be one cut in all of 2024. That seemed to have little effect on this final day of the week here, with a very low participation on this pre-holiday day. Stock market, for us, nothing has changed in our analysis, as the pattern structures and momentum conditions are still positive. And while a correction is looming, no sign of that at all yet. A bit later in the show, I'll show you what will make a difference, and what will take to know that a correction is actually happening. For this week in the stock market, they're mixed on this very slow week. The NASDAQ actually down a little bit, and the S&P 500 up a little bit, but the Dow Jones and Russell did better, Russell gaining almost 2% on the week so far here at midday on Thursday. Bond market small to the upside with the 10-year yields coming down 2 basis points. Gold, an all-time high, gaining over $60, and we believe 2,300 is coming soon. Silver actually weaker, losing a few pennies on the week. Definitely the other metals are behind the gold market, but we think they're going to catch up. And if you look at the gold and silver miners, they are really starting to look a lot better, and sometimes those lead the market. The dollar is moving sideways, not much going on at all this week, and we do believe that the dollar is going to head to the downside. And the oil market, this is a pretty decent pattern now on the short term. It gains about $1.50, very strong on the short term patterns, and we think it'll have maybe a few days down and then try the upside again. We are looking for some steeper declines in the oil market a little later on, but right now those patterns are looking strong. If you want to see all of our analysis in the the commodity markets, then just watch the Future Speak show every Wednesday, and you will see just great work from RV as he presents that, and that's for our level 2, 3, and 4 members. Go to askSlim.com and explore, look around. There's just so much that we have here. You can get acquainted by signing up for our SIR Lite, that Stock Index Report Lite. It's free every single day. Matt puts that out, and you'll get information on the S&P 500 that you'll think will be very valuable. So that is free, and it's a good way to figure out what we're doing. YouTube, subscribe to the channel, click the notification bell, and you know when we put videos up. And do like this video. Give it a thumbs up. On X, follow me at askSlim. And for any questions you have on what we share here, write to Matt at askSlim.com. This is Trade Planning with Options. Katie is truly an expert, and she's going to review the analysis in XBI. She'll be combining our style of charting with option trading on the Tasty Trade platform. And make sure, if you don't have a Tasty Trade account, go to our website, and you can sign up right there. And Katie is going to show you how to do that.
Hi, this is Katie with askSlim. This is Trade Planning with Options on March 27th, 2024. We do have a lot of earnings coming up in the April timeframe in many symbols. So I'm going to demonstrate a trade idea in one of the ETFs. It's the biotech ETF, symbol XBI. First, we have our legal disclaimer. The options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm simply educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow the trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email Matt at askSlim.com. Let's get started. Let's first look at the weekly chart of XBI to get an overview. We have blue cycle brackets on the bottom, this dominant cycle. That average length is 33 bars. And you will notice that we are in the peaking phase of the current cycle. XBI made it up to this minor 61.8% extension and then backed off from that level. Our momentum has now turned negative, as shown by this purple reversal scout. Our weekly cycle timing window is not out until in June, so XBI does have time to turn around and make another attempt up to this level. You can see our projection here. Now let's go and take a look at the daily chart. Here it's easy to see the weakness that is developing. The prior cycle formed its low right here, and XBI moved up only to the very bottom of the resistance zone before moving back down. And XBI has been testing this cycle low support at 92.15. It hasn't broken below that yet, but momentum has remained negative with the purple reversal scout, and it has now also returned back to negative with the slim ribbon. So based on this weakness and negative momentum, we are projecting down to this area. We have a 60.8% extension here at about $90.50, and below that is the target zone from 88.50 to about 86. Up above the top of this resistance zone is right around $100. The daily cycle timing window is coming up between April 17th and April 25th. That's the period of time when we would expect this current cycle to form a trough. Now we're going to go over to the Tasty Trade platform. If you are interested in that platform, please go to the askSlim homepage, hover over the Marketing Partners tab, and click on Tasty Trade. That will take you to a page where you can learn more. And if you choose to open an account with them through our link here, that will help you with a special bonus, and it also helps us. Now over to Tasty Trade. So here is XBI loaded into the platform, and you can see it has a high IV rank at 63.1. So this implies a short premium strategy because those types of strategies will benefit from a volatility contraction, a reversion to the mean. Now I'm going to use the April 26th expiration cycle because that aligns with the end of that expected daily cycle timing window. If you don't like using weekly expirations, you can also use the April monthly. So I'm going to set up a strangle in here, which is the sale of an out of the money call and an out of the money put. There are two reasons that I'm using that strategy. First, while XBI is showing weakness on the daily time frame, it has not broken down. It's doing sideways movement and still has an opportunity to repair itself. The OBI, which is the option bias indicator, is N3, suggesting a bearish bias, but the MCI, the market condition indicator, is just testing the top of the swing zone, and the Slimulator momentum tracker is showing slightly bullish to neutral. So that's a tool for a longer time frame than what we are trading, but it shows the longer term market conditions. So a neutral strategy is reasonable in here. We are going to skew it slightly to give us some short deltas. And the other reason is because we're using an expiration cycle that only has 30 days left, selling both the call and the put will give us a better credit. So let's go ahead and sell the call that aligns with the top of that resistance zone, and that is the 100 call. And then let's go ahead and sell the put that aligns with the bottom of the target zone, and that is the 85 put. So this is basically an expected move strangle. You can see the expected move on the Tasty Trade platform with this brown vertical bar. So we are collecting a credit of $1.60. That's our max profit. Our max loss is limited by 0 on the downside, and it is unlimited on the upside. This trade uses right around $1,200 in capital. Over here, it has a 72% probability of profit. We pick up $6.87 in daily theta, and we do pick up 11 short deltas, and that fits with the general bearish conditions that we are seeing. So if we go over to the curve mode and click on analysis, this will show you what we need to have happen. We want XBI to stay in between those short strikes and for time to pass. We would at least want it to stay in between our break-even points, and that would be $1.60 above and below your strikes. If you prefer to do a defined risk trade, you can buy further out of the money wings to define your risk. If you did that, you would need to purchase the 105 call and the 80 put. Let's see if you can still collect just over $1. I wouldn't go any lower than $1. And you could also go $10 wide, but any wider than that, and you'd be using even more buying power than just doing the strangle. That's our options trade idea today. I will update the options trade idea tracker with this trade idea and follow up on it again next week. As always, you can reach me on Discord or via email at katie@askSlim.com if you have questions or feedback.
This is Trade Ideas. Ari does this all the time, puts out great ideas for our level 3 and 4 members. This is an example of what he did, something he put up this week. FCX, short-term positive on this one, and you're going to see how he applies our analysis to a trade setup.
This is an askSlim trade idea video walkthrough for a short-term long in Freeport McMoran. That symbol FCX. It is March 27th at around 12:10 p.m. Eastern Time. Prior to looking at Freeport, what we first want to do is look at the underlying commodity, and for that we will focus this video primarily on copper, which is /HG on the thinkorswim platform. So this is our weekly and daily cycle analysis for copper. Let's go ahead and pull up the weekly chart. Now, as we highlighted in FutureSpeak, which is available for level 2 members and up, copper is in an intermediate term rising phase on the intermediate term. You can see this clear sell-off and now the rally. We are now forming what we see as a bull flag, and we are watching for this to turn back to the upside here and look up towards this zone right here from right around 418 to 423 or so in the /HG weekly time frame. If we shift over to the daily chart, you'll see why we believe this is an interesting time to look long in both copper and Freeport is that there is a daily low that is due right around now, 319 to 327. And let's also focus on a really key concept in cycle analysis, which is cycle translations. This is a bullish right-hand translation where we have used up most of this cycle rallying. It's leaving a short window of time for a pullback. That's this sell-off here. And then once we form the low, there are good odds of at least a retest of that high in that next rising phase. So we are looking for copper to hold this zone right here from right around 397.5 to 391.70 or so, and then to turn back up on the upside. So with this as the foundation, let's go ahead now and shift over to Freeport McMoran, which is FCX. And we will go ahead and pull up the weekly chart now in Freeport. And what we've done here is we have overlaid the copper weekly money flow pattern here in red, and we have the FCX money flow pattern in black. And we can see that we are in the later stages of a rising phase on the intermediate term in Freeport. There was a pullback right here into that copper low. Then once we got into the rising phase on the copper low, we just blasted off on the upside. So overall, this is a really strong pattern. You can see that we are also hovering near range highs. So this looks really poised over time for a breakout to the upside, and it's reasonable to look back towards the 52 level going into the back half of 2024. Right now, we are looking for a bit higher here in the short term over the next 1 to 3 weeks, then to get a pullback that would likely set up a really interesting intermediate term long side opportunity for a move back up, likely towards that $52 level. If we shift over to the daily time frame, you will see that there is a daily low due right around now, perfectly in line with copper. There's a low that is due 321 to right around 4.3. This is also a bullish right-hand translation here, where we have used up this whole cycle rally. It's leaving a short window of time for a pullback. That's this modest flag that is forming here, and we are watching for this to turn back up. Keep an eye on the slim ribbon PO, which is at the bottom here. If this can curl back to the upside here and give a bullish signal, we would look for some follow through back in the direction of this, what is a bullish trend. Okay, so watch that closely. The PO is available for level 4 members and up at askSlim to download onto their Thinkorswim platform. So just keep your eyes on that. Watch for a curl up in the PO to give a bull signal. If that were to happen, we would look for a move back up to look at this zone right here from 46.40 up to right around 46.85. On the downside, we are watching for it to hold this zone right here, 44.60 to right around 44.01. And if it loses 43.42 on a closing basis, this would be marked as a loser. The overall risk on this idea is right around 119. We are looking for a move of at least 190 or so on the upside in Freeport. Okay, so this is our overall look here on both the intermediate term and short term, and how we set up a short term long bias trade idea here in Freeport. If you'd like to see more of our trade ideas and how we actually monitor these live, please go ahead and sign up for a level 3 membership or higher at askSlim. And as always, if you have any questions, feel free to post them in the comments section here on YouTube. Thanks again, and have a great day.
Stock market analysis and projections on the S&P 500. Important information right now. Make sure that you read this slide. It gives you an idea of our style of analysis and what you should think about when you try to apply what we share with you, especially the concept of trade ownership. You really have to make the trade your own. This is something you have to see if you are an active trader. Watch it. Announcing the askSlim Day Trader Service 2.0, launch date 3/11/24. And this is the most amazing collection of custom tools that I have ever seen for active traders. Amazing resources. In 50 years trading, I have never seen anything like this. Our team has been building this for 6 months, and you're going to see something that is incredible. On the left, you can see the impulse monitor. What this tells you, looking here, and this is set up for 4 of the indexes that everybody trades, what the conditions are of the market. So it's green, yellow, or red. And in this case, you're seeing all green, so the market is in strong conditions. That means that there is upside energy in the market, and it is likely to continue to the upside because of the inertia that's in the market, the energy that's in the market, and notifications that you can see based on when these things change. This one in the middle is my favorite strategy. It's the 8-minute strategy. And what you get here is our strategy conditions right here. So you can see when they're green, you have a strategy condition that is likely trade on. And when it's yellow, there's no trade. And when it's red, it's trade on the downside. And these are the different aspects, the inputs in that strategy. And when they're all in alignment, then these signals go on, and it really tells you when it's trade on in the 8-minute strategy. Also, add to that Matt's intraday price zone roadmap. This is support resistances, and it gives you a great sense of bias in the individual indexes. So it's S&P 500, NASDAQ, and the Russell, and you have our support and resistance zones, and the yellows areas are the acceleration zones, and that tells you where it's likely to keep accelerating through that area or to find support or resistance. As you could see, support being found right over here on the down day. And in the yellow zones, when it gets in there, it's pretty likely it's going to move all the way through it. So you can see, and when things are changing, then you get our reversal scout in there. And there are two versions of it, the swing and the scalp reversal scout. And this is just so amazing, as it will be a great guide to you, all of these tools, as to which are the strongest and which of the weakest indexes, and which ones you want to choose to be on the long side or short side or both if you're a pair trader. Amazing tools that you see right over here. Let's look at the next screen, and you will see that what we have here is my turbo indicator. So what happens is that, let's say it's going up and it's green and telling you that, in this case, the QQQ is in an a period of upward energy. When the turbo goes on, energy is accelerating, and that really helps you expand your trade, improve your trade in both time and price. So you can stay in the trade longer, and of course that's the key, maximizing winning trades. Also, we've added all of these symbols in here for those that are day traders, scalpers in the individual stocks or important ETFs, and you can see how it shows up here, where it shows you whether or not it's positive or negative, or whether the turbo is on, and what the trade condition is based on that, based on my 8-minute strategy. Just amazing. And then a change log that shows you when everything is changing. Add to that, this is just beyond belief, we're recording the entire day. In other words, you can go back and look at these strategies. You can go back and review what happened during the whole day, and then you can see, as we've recorded everything, how you could have improved your approach to the market on that day. You can go back and review many days, because we'll be recording every single day. And this takes a shot of it every 5 minutes, and you can just move forward through the day and look at how these indicators are changing, and how the trade strategy was changing, and how it's trading around each of the support and resistances, and reconstruct the day, and really learn so much of how you could have approached the day. And our new cockpit is something like you've never seen. If you're a day trader, look at this. Day Trader Cockpit, it has all of that information on one page. We're going to be zooming this to you. Yes, it's live all day long, and you'll get our full suite of trading indicators and planning tools for your active trading, day trading. You'll get the impulse monitor. You'll get the 8-minute trade condition. You'll see the charts that make up that 8-minute condition. It's just so informative in there. And right over here on the top, you can see that is our trade signal line in there, and that is so important. And then again, you get Matt's key chart grid there on the three indexes that you see there, and really gives you a fantastic idea, putting all of this together as to what the conditions are of each of these indexes, or the important key stocks that we have built in here, all day, every day, There's no way that you can know more about the markets if you're a day trader than having the day trader cockpit. All of this, can you imagine? We're running a special right now, so lock in the introductory rate. First month 30% off, only $24.50. What that means is that, well, you can cancel it at any time, but it only upgrades at $34.95 a month, and you're going to lock in that introductory rate. And then the prices are going to go up, but not to you, because you're going to get these fantastic low prices. You want to learn more? Go to askSlim.com, go to the top of the front page, click that Learn More button, or write to Matt at askSlim.com for more information. He'll be able to answer any questions you have. This is the askSlim Day Trader Service 2.0. Nothing like this anywhere else. It's going to really raise your probability of success as an active trader in the market. Please do go to askSlim right now and subscribe. For those of you that want to learn more, Matt is doing a webinar on Thursday, March 28th. He's going to take a comprehensive look at the day trader service. That is on March 28th at 3 p.m. Central Time, 5 p.m. Eastern Time. And if you miss it, just write to Matt at askSlim.com, and he'll be able to send you a replay, and you're going to love what you see. Stock market analysis, the S&P 500 is what we're going to be looking at, multiple time frame analysis, plus we'll look at our market condition monitor, and the market is still strong, and the question is, what would change that? Let's take a look as we look at the S&P 500. This is SPY. On the left, you're looking at the weekly chart. On the right, we're looking at the daily chart. If you are brand new to our work, we are cycle analysts. We look at the rhythms in the market, the energies of the market, just like waves in the ocean, just like there are cycle patterns everywhere in nature. We apply them to the stock market analysis, and they are just phenomenal. Let's take a look as we switch over to this weekly chart, and I'll blow this up for you to see. And you can see in here, as I look back, these cycle patterns. And each of these troughs in here is where the bottoms line up. You could see that right there. When we have two cycles coming down, that is often a time frame where you're going to get a corrective period, like right in here, and right in here, and right in here. You can see that just lining up absolutely perfectly. And yes, we're coming into one of those right over here. We call those the periods of risk. That's where these alignments come in, and it doesn't mean anything other than the natural ebb and flow of the market is about to bring you a outward flow of funds is what it means, and we're getting into one of those periods right now. Now, the trough that we're pointing right over here, which is somewhere around end of April, beginning of May, that is the ideal trough. In other words, it's right in the middle. Normally, the lows come somewhere a couple bars to the left or a couple bars to the right. Occasionally, they nail it like they did back over here in October. Almost every single time you get these corrections, in fact, I'm going to say every time in the last decade or so, you've taken out that 13-week moving average that's right over there, and very often, as you can see, you get to the 34-week moving average, which is right over there. So we're looking for a decline, which we thought would come. Originally, we thought it would become March or April, but a little bit of shifting in the time frames pushed it out to May, as you can see right over here. So we have late March through May as the period of risk, the time when we expect a peak to come in here and then a decline. When we say period of risk is late March to May, that is the date range that we would expect the trough or the bottom to form. It's also the period where you would expect to get some declines. Now, they're normally at least 4 weeks long, even in these very bullish cycles. You could see here the slim ribbon, the reversal scout right there. When it turned up, that gives you the signal that the bottom is in place. When it turned down, it gave you the signal that the peak is in place. And you can see in here, it's been positive this whole way up. It's been telling you of the strength, and it is still positive. So when we say, and I said in the beginning of the show, all the momentum conditions were still positive, we're looking at the weekly, the daily, even some intraday, and tells us that things are just still immensely strong. That has not changed. As you see, we're trading up near the high. My high projection for this entire year when I did my year-end show was around 510 and or 5100 on the S&P, and I thought that would be an extreme and hard to get to. Of course, the move into technology AI changed that as the market got very strong, so we had to raise our upside target. Now you could see a very key monthly 100% fib extension that is right here. We came up and tagged that right at that level, and this is a pretty key area, and it might be hard for the market to continue moving up until there is this corrective period. But then after this is over in May, then you get into this period over here, end of May, June, July, maybe even August, where the markets are likely to be rising again. So we'll look for a correction and then another upward move to new highs. That's what it really looks like. This is the 23.6% right over there. Sorry about that. Let me just grab this and move it where it belongs. It won't go, so that's because I have to grab it like this, and we'll slide it up there. So that's the 23.6%. That would be a 5.3% correction. That would be very, very modest based on what most of these corrections look like. If it got down to the monthly 23, that would be 7.6%. So the targets on the downside are about 499 and then 486. And then down over here around 480. That's what we expect to happen in these next 4 to 6 weeks, coming out into sometime early May, potentially, and that would be this very minor correction of this very positive upward bull market trend that you see right in here. This is your whole bull market right there, and you have, as you can see, you can have three cycles in there, and the third one is about to have its correction. You want to learn about cycle analysis, of course. Go to askSlim.com, go to the workshops tab, click on that, and there's a free video there, and it tells you all about what our workshop is, and I think you'll find it very interesting to watch that. So corrective process is soon to come, the way that we see this, and a peaking should be coming, well, quite soon. When I look at the daily chart, you can see in here something similar. I'm just going to look at this whole period right in here. This is phenomenal. What's, in fact, is quite unusual to have 1, 2, 3, 4, and be in the fifth rising cycle. And you can see it very clearly calls the upward trend. You can see the slim ribbon, which is our momentum indicator right on here, and that's a free indicator. Which you can get on Thinkorswim. It's also on Wealth 365 charts. It's on TradingView. So you can get that a slim ribbon free. If you're using it on Thinkorswim, you have to download it from our site to get that. So on the bottom here is a slim ribbon PO, and every time it gives you these green arrows in here, it warns you that there's going to be a resumption of momentum in that direction. Phenomenal just how every one of those was perfect in here. So you have this cycle right over here still rising. Let's take a closer look right there. And what's important to see is, remember, we're talking about that period in late April or early May where there is likely to be that decline of somewhere between, let's say, 5.5% and 8%. When I highlight this cycle right over here, that's going to tell me the date right here, and that date for that trough. Come on, why don't you tell me that? It doesn't want to do that right now. Let me just get rid of that arrow, and I want to really get you that number. And that should do it. There we are. So that ends on even later in May, May 24th. So sometime in May is when this really looks like this trough is going to come in SPY. That would be this cycle right over here, completing, and then the next cycle coming, and then probably moving down sharply. You can see this cycle aligns with the intermediate correction. And you must see a negative cycle configuration and negative momentum for the correction to be in force. What that would mean right now is that 508.12 would need to be broken. If it broke this 78.6% level right there at 511, that would be a warning to us. if it got down that far. So right now it's 523. So you can see it's got a ways to go even before it starts warning, and then under 508 would be negative. This cycle right over here could stay positive right here, and the next one is the one that breaks down and takes it down. So if you look at the length of those cycles, each of them is 25 days, 25 trading days. So that whole decline could be contained in that next one right out over there. So we're looking at a potential peaking. Here is that monthly resistance that we talked about right over here around 524, 525. There's also a 100% fib extension from the other cycle. This is the 100% from the monthly, the 61.8 from the daily, and this is the 78.6 right over there. So these resistances right over here are 524 to about 530 with an outside chance at 537 when you look at that. We're going to look for this cycles in here to create the peak. We have no sign of that yet. Every single momentum indicator is strong. There is only the slightest of weakening going on in the NASDAQ, and I'm going to show you that looking at the MCM in a moment. So when I go back here to the weekly cycle, you can see the side-by-side and the daily cycle, and now the weekly cycle is dominant. So once we get a sign that this is turning down, it will mean that the weekly is pushing down because there's a dominance over here. It'll be very, very clear when we start to get those breakdowns. Again, the warning at 511, the breakdown at 508.12 right over here. That's when we really get the signal that the market has broken down. In the meantime, strong momentum on the weekly, strong momentum on the daily, bullish configurations going on in the daily. All of that is positive. You've got to be looking towards the upside until the market tells you anything different. That is a look at SPY. Let's take a look here as we switch over to our market conditions monitor. Now this is a fantastic application which is available to level 3 and level 4 members. The difference being level 4 members get intraday information down to the 3-minute where level 3 does not. What I want to look at in here is the S&P 500, the NASDAQ, the QQQ, and the Dow, as you see right over there as they show up. And you'll see here on the short term, so I can go to short term, intermediate, near term, which is kind of an intraday swing trader, and intraday is more of a scalper mode. So here on the short term, you can see the QQQ has turned neutral. And I said in the beginning of the show, there's a rotation that's beginning. And you could see that there is the very, very beginning of the QQQ, or the NASDAQ, weakening while the other ones are still very bullish, very bullish, very bullish here on the short term. On the intermediate term, which takes in the weeklies and monthlies, which is for investor-minded people, you can see it's still very bullish all the way across the board. Let's go back to the short term right over here and take a look at at this very bullish condition except for QQQ. And now let's take a look at what some of the top stocks are. So I'm just going to scroll this up so we can get a little bit more in here. Trade conditions. Here is the very bullish trade conditions right over here. And let's just look at the top 7 right there. As you can see, all of these very bullish. I can scroll down and you'll be able to tell some more of them that are very bullish moving down. You can see all of those very bullish conditions. This is such a great application. It really gives you a great idea. Remember, we're looking at the short-term conditions right over here. Let's take a look at the very bearish conditions right here by just snapping on that. And you can see Adobe, one of those techs, giving bearish conditions. IYT, IGV, Nike, Baba, and corn. Now, corn is improving. I'm surprised it's showing up right over there. And actually, you can see these are very bearish, but this is only bearish. Corn market has been improving, even though it's showing on bearish. So I think it's going to be giving you some better readings in there. So you can see bearish ones right there. And great information when you look at that. You want to look at the intermediate term, right there. Here's your very bearish top 5 right over there. And yes, Tesla is one of those stocks that is very bearish on the immediate term. That's people who are investors. And we know it is turning very weak right there. what are the top 5 very bullish ones that we look at? And there you are. XLP, EWA, Australia, right? ARC, wow, that's crazy. XLC, the communication stocks, and EWW is Mexico. So there's what it looks like as very bearish. Please do become a level 3 or 4 member to get this application. It is absolutely fantastic, great help as you, especially when you look at different periods of time in here based on the type of trading that you want to be doing. Or you can go here to the time frames mode right over there and just see the individual time frames on our Reversal Scout and the Slim Ribbon. When you look at that, or you can type in a symbol right over here, like let's just go to Apple, and it will bring it up for you right like that. So fantastic application right over there, and that gives you an idea of the condition of the stock market. As we said, the NASDAQ weakening, the rest of the market super strong. This is an overall intermediate to longer term, very positive condition that we see going on here. Just looking for this corrective period to go on out sometime into May, and then the market to be moving up again to more highs, to what are already extreme valuations, and probably getting to more extreme valuations before any kind of real bear market sets in. That is a look at the SPY and a look at the stock market today and our amazing MCM. Please do go become a level 2, 3, or 4 member to get all of our analysis on all of the indexes, and watch the Future Speak show on Wednesdays when Arby goes over all of those futures. Go to askSlim.com and explore, get acquainted, sign up for our SIR Lite on YouTube, and subscribe to our channel. Click the notification bell, and do like this video. Watch the videos on there, and you'll get a great idea on the playlists of what we do. Follow us at askSlim, and please do write to me at askSlim for any questions you have. Take a look at our amazing day trader application. I think you're going to find it just absolutely fantastic. That is the end of this show. I want you to be really careful, be so safe. Have a great holiday weekend, and be so careful because it is so crazy out there. And I'm always wishing you great trading.
Well, I'm going